But yes, to understand how the last, 15 to 20 minutes of the trade looks like and how you should be positioned, I'll quickly go across to my technical expert of the show. Joining me is Nilesh Jain of Centrum Finverse. Nilesh, good afternoon. Of course, Nifty is seeing a sharp fall today, a bit of a geopolitical tensions which has been, shadowing the markets as of now. In terms of levels, can we see a further fall going ahead?
Very good afternoon to you, Lavisha. Absolutely. So the Nifty has wiped out previous 2 days of gain. In fact, it is making an attempt to, erode the third day of gain as well, which was seen on 16th of February. So overall, looking at the setup, looks negative for multiple reasons. Till yesterday, Nifty was trading well above all long-term and short-term moving averages, but now it has broken below 50, 100, and now 21 DMA is also at stake on the closing basis. So overall, looking at this kind of a close below 25,500 is not a great, closing. So we can expect a follow-up on the lower side to continue. The data are spanning out on a negative side. Today, we are witnessing selling across the board. The only thing that is up today, that is volatility index, where we have seen a spike of close to 10%. So that's not a good sign, and it's basically indicating a caution and overall sell on rise kind of a structure as long as Nifty trades below 26,000. Broader range for the Nifty from here looks like 25,300 to 25,800. So that's the broader 500-point trading range for the Nifty. And looking at the bank Nifty structure as well, if you see, till yesterday it was trading with the higher highs and higher low formation, but now it has negated that pattern and forming a bearish engulfing candlestick formation that basically indicates a bearish reversal from here. So we may see a follow up on the lower side to continue towards 60,600 to 60,500 in the bank Nifty as well. So both benchmark indices, Nifty, bank Nifty, are looking on a weaker side.
Okay, got it. Nilesh, but we have seen a broad-based sell-off in the markets. India VIX has also ticked up. I mean, going ahead, do you think that the nervousness is going to prevail given that there was no significant breakthrough which was reached between US and Iran?
Absolutely. See, if you pull up gold and silver today, where we have seen a spike, silver is up close to 5%. As far as silver bees is concerned, even gold bees is up close to 3%. So this kind of situation arises when you see geopolitical tension, which is getting emerge in the countries like US and Iran, and that's the reason we are witnessing a sell-off in the Indian equity market as well. So multiple signals that we are getting is this situation is likely to escalate further, and that will be a negative for the Indian equity market going forward. So we need to, wait for the dust to settle down, and till then, the markets are likely to remain extremely volatile and frequent profit booking and selling pressure at the high level that cannot be ruled out. So in this kind of market, the strategy should be to, for the time being, stay on a sideline or pick quality names in the portfolio from a position perspective, because a lot of quality stocks are also witnessing a sharp decline in today's trading session. So focus should be on the quality stocks. That is also from a position perspective.
Okay, all right, that's the view. Clearly, markets have been a little jittery on the back of some geopolitical tensions. But let's take some individual movers, and we'll first touch base on crude-sensitive stocks, which have been the top highlight today. If you look at from the OMCs to paints and even aviation and tire companies, all of these stocks have come under pressure. We did see this coming on the back of Brent crude prices jumping more than 4% overnight, and also right now Brent has been trading above that $71 per barrel. Nilesh, for you, of course, how do all of these stocks look like, given that geopolitical tensions and, of course, the military action build-up is on the rise? So do you expect the free fall to be prevalent going ahead?
Absolutely, Lavisha. So you have, highlighted a very important point where we have seen a fresh breakout in the Brent crude. It has crossed 71 mark, $71 mark after a long time. So given this kind of a multi-month breakout in the Brent crude, that is indicating that the Brent crude is basically moving towards 75 to $78 on the upside. So it's kind of a 6 to 8 months consolidation breakout that we have seen in the Brent crude, and this basically have an inverse relationship with the OMCs, paints, and airline stocks. So if you see HP, BP, IOC, all these three stocks are looking weak. Specifically, Hindustan Petroleum is a sell at current level as well, because the structure is looking weak for 420, 415 on the lower side. So sell at current level or on pullback, you can witness selling pressure in the Hindustan Petroleum. Keep a stop loss at 448, and on the lower side 420, 415 kind of levels can be seen. Not only HPCL, but also in the paint stocks like Berger Paint, Asian Paint, and across all OMC stocks, you are witnessing this kind of selling pressure, which is likely to continue further.
Okay, all right. That's the view coming in for a majority of the crude sensitive stocks. If you look at the charts also, HPCL is down by about 4.5%. Even BPCL has been trading with a bit of a cuts at this point of time, with about 3% cuts coming in for there as well. And if you look at the Asian paints, and of course the paints across the sector has been feeling the heat. So yes, let's move on and talk about another stock in focus. That's your Dixon Tech. Of course, the stock has not done well given that CLSA has downgraded the counter to a hold rating from outperform, and they have slashed its target price to by about 23%. Now, what the brokerage has been saying is that the memory industry is entering a super cycle, which is driven by AI-led demand for higher bandwidth memory. And CLSA believes that smartphone volumes are at risk, given that higher memory costs could push up the average selling prices by about 10 to 25%. Coming to you, Nilesh, for Dixon Technologies, clearly the stock is down by about 2.5%. And it's the second straight session for declines. So what do you expect going ahead? How does the trend look like?
Well, Lavisha, if you just pull up the chart of Dixon Technology of last almost 2 year now, you can clearly see this particular counter in last 1.5 year has constantly witnessed selling pressure at the high level. Specifically in last 6 months, we have seen a sharp decline. And recently, in the previous month, we did see some bit of a pullback, but that pullback again got sold into, and it is constantly facing resistance at the high level. We have already seen a death crossover, which means that the 50 DMA has crossed below its long-term 200-day moving average. And as of now, it is trading below 200 DMA, 100 DMA, and the structure is still looking weak. This pullback, whatever if you get, that should be used as a kind of exit opportunity in Dixon and other EMS space as a whole. We expect this particular counter to move towards 10,800 to 10,500 kind of zone. So as long as it trades below 12,000, the structure is kind of a sell on rise.
Okay, the structure is sell on rise for Dixon Technology, and today also the stock has been reeling under pressure. But one more stock which has been not doing well, that's your Coforge, given that CLSA was positive on the counter after Sabre's earnings call. Now, CLSA has given out a high conviction outperform rating on the counter with a target price of about 24.26 per share. But it believes that, going ahead, that right now that the stock has been, not doing well. Given that we've seen a bit of a broad-based sell-off, of course, that's why the stock has also been succumbing to certain pressure. And right now the stock is at its day's low level. Nilesh, for you, how does the stock look like? Because right now, of course, it's a broad-based sell-off, and that's why the stock has not been doing well. But the stock, even from the past 1 month charts, it looks like it has declined by about 19%.
Well, absolutely. In this month, in the February series itself, so far it has corrected close to 18%. And it is, kind of a structural breakdown that we have already seen from the levels of 1550. So structure is not, looking that great. If you see any pullback, that again likely to face resistance at the high level. And the only thing that is positive in this particular counter is that it has a very strong support at 1330. So if somebody is already holding the long position, can keep a 1330 as a stop loss, because if it breaks that particular support, then the next target on the lower side could be somewhere around 1250 to 1200. So overall, the broader structure is not looking that great, and sell on rise kind of a strategy as long as it trades below 1500.
Okay, all right. Sell on rise as a strategy for Coforge. But yes, we'll just talk about IT sector in particular. Nilesh, I mean, how are you viewing that, given that we've seen AI scare which is going on, and which we've seen that Nifty IT index has been quite volatile throughout this week itself. Today also it's reeling under some pressure. So going ahead, how would you suggest investors to approach the tech sector?
Well, Avisha, first of all, if you can just pull up last 2 year chart on in the year 2024 in the month of May, we saw a swing low in the Nifty IT index somewhere around 31,000, and a similar kind of low that we saw in the month of April 2025 as well. And this time again in the month of February, this series we have seen similar kind of a low. So you can clearly see a triple bottom kind of a formation that basically hints that the Nifty IT index has a very strong support at 31,000 to 31,300 zone. As long as it trades above that and as long as it manages to defend that particular low, there could be possibility of a pullback, and this particular pullback may extend towards 32,800, 33,000, or maybe 34,000 on the upside. But the major structure is still looking weak, and it's not advisable to take any aggressive long position till the time we get any strong reversal candle. Till then, some bit of a consolidation that cannot be allowed, but overall, since it has gone into extremely volatile territory, we can expect some bit of a pullback.
Okay, all right. You can expect some bit of a pullback. We'll be watching out how the tech stocks behave in the upcoming days. But yes, let's move on and talk about another stock in focus. That's your NCC. The stock has clearly recovered from the day's low level at this point of time. It's up by about 0.1%. So it's a flat, it's showcasing a flat gain. But yes, units recovered quite a bit from the day's low levels. But yes, why the stock fell was because NHAI debarred the company and its step-down subsidiary, which is OB Infra, from participating in the tender process for a period of 2 years. Nilesh, what do you think the trend is going to be? Because the stock clearly has shown a comeback after falling nearly 10%.
Right, Lavisha. So overall, the major structure is still looking weak. Reason being, if you see in last 1.5 year, the counter has constantly faced resistance at its 200 day long-term moving average, which is right now placed at 200. But before that, we can see multiple resistances on the upside. The important level that needs to be taken off is 160. 160, as long as it trades below 160, we can expect further selling pressure at the high level. So not looking that great and not looking promising enough to take any contract at current level. So it's an avoid as long as it trades below 160, and we can expect this counter to oscillate in the range of 140 to 160.
Okay, all right, got it. That's the view coming in for NCC. We'll be watching out how the stock behaves, but currently the structure looks weak for the time being. That's the key takeaway. But yes, let's move on and talk about Tata Steel, because that particular stock hit a new high today. Of course, the stock is off the day's high, but we did see that the company had come out with good set of Q3 performance. Nilesh, for you, Tata Steel, how does the near-term trend looks like? Because in the past 1 month, the stock is still up by about 10 to 12%.
Absolutely. So in this month, it is already up close to 6%, and we have already seen a broad-based rally across all metal stocks. So given that kind of a setup, the major structure is still looking on a positive side. Then the near-term target on the upside could be somewhere around 215 to 220. Overall, today's fall is basically because of the broad-based selling that we are witnessing in the today's session. But the major and important support for this particular counter is somewhere placed around 195. As long as it trades below above 195, the major structure still appears on a positive side and looks strong. And gradually, we can expect a move towards 215, 220 in the short run, and positionally 240, 250 kind of levels can be seen from 4 to 6 month kind of time frame.
Okay, all right, got it. That's the view for Tata Steel. But yes, let's talk about another buzzing stock in focus. That's your Newgen Technologies. The stock is clearly seeing quite a bit of a rally at this point of time, and they've already extended their recovery rally after they hit a 52-week low, which is recently itself. Good volumes, which we are seeing, Nilesh, for Newgen Software. How do you think the trend is going to be, given that they've just recovered from their 52-week lows?
Well, absolutely, no doubt. We have seen a sharp rebound in this particular counter. It is up close to 30% in last 3 sessions. So with this kind of a quick spurt that we have seen, it's not advisable. First of all, it's not advisable to chase the momentum because the risk and reward is not looking favorable. And if somebody is already holding the long position, can ride this rally up to 650, 680, or maybe 720 kind of levels on the back of pullback can be seen, but not looking that confident to take any fresh entry at the current market price, because the support which is coming somewhere around 540. So ideal strategy should be to wait for some bit of a decline if somebody wants to take any sort of a long position in this particular counter. But the major structure is still looking sideways to weak till the time it doesn't take out 720 level on the upside.
Okay, all right. That's the view for Newgen Software. But yes, a good rebound for the counter. That's what we have been observing. But yes, let's move on and talk about LG Electronics because we have Axis Direct, who has initiated a buy coverage on the counter, given out a target price of 1815 rupees per share, which implies that the stock could see a run up of about 15% from the current levels. Now, what the brokerage believes is that the company is well positioned for sustained profitability, and the growth will be supported by its leading market share and brand equity and deep distribution networks. That's what the key rationale is behind their bullish argument. Nilesh, yesterday also we did see a positive note which came in from Goldman. But from a technical perspective, how does LG Electronics look like from a near term?
Well, I have a very limited data on the charts, but whatever data is available in front of me, that clearly shows that the stock is witnessing a gradual recovery from the lows. And as of now, it has a very strong support at 1475. So first of all, 1475 should be the stop loss for the long position. And we can expect a gradual recovery and momentum to continue towards 1620 to 1650 on the upside. I don't see any major upside as of now, but yes, short-term uptrend may continue further towards 1600 plus.
Okay, all right. That's the view for LG Electronics. But yes, let's move on and talk about delivery because that stock did well, but right now the stock is off the day's high levels. Given that the company had announced that it has been collaborating with NVIDIA to build an AI-powered location intelligence solutions which is tailored to the India's complex geography. So yes, a good news announcement which came in from delivery, but the stock has cooled off from the day's high levels. Nilesh, for you, how does the stock look like? Because recently the stock has done quite well.
Lavisha, can you please repeat the name of the counter?
Delivery.
Right. So delivery, if you see the broader structure, it looks more sort of a sideways now. We have seen some bit of profit taking at the high level, but the good part is that it has a very strong support at 415 to 420 zone. So 415, first of all, should be the stop loss for the long position, and we can expect a gradual gradual recovery to continue towards 460 to 40 level on the upside. So looks sideways to positive, but ideally entry could be done in the range of 415 to 420. That's a good entry point. Then probably one can keep a stop loss below 400, and we can expect a move towards 450 to 460 in the near term.
Okay, all right. 450 to 460 can be possible in the near term. That's the major cue for delivery. We'll be watching out for the stock. But yes, let's move on and talk about Eicher Motors. The stock has cooled off about 200 points from the day's high level. But we did see an interesting note which came out from Goldman Sachs, where they have reiterated a buy call on the counter, seeing improvement in volume growth and earnings upgrades going ahead. Now, as a result of which they have raised the target price to 9,200 rupees as well. And they believe that they have also raised its FY26 to 28 EPS estimates by up to 3%. Nilesh, for you, Eicher Motors, how does it look like? Of course, the stock is seeing a bit of a cool off today. But from a technical perspective, it looks like a stock has been seeing a bit of a cool off after a good breakout.
Well, we have already seen a fresh record high in this week in this particular counter. In fact, the broader structure still looks strong, trading in the uncharted territory. However, for the day, we are witnessing profit taking due to the selling pressure we are witnessing across the board. But the major structure still looks positive. As of now, it is trading in the overbought territory. So hence, it's not advisable to chase this particular stock at the high level. Better wait for a good entry. Could be somewhere around 7,500 to 7,600. That can be a good entry point. One can keep a stop loss below 7,200. And positional target is very much intact of somewhere around 8,300 to 8,500 for the Eicher Motor.
Okay, all right. That's the view for Eicher Motors. But let's quickly take how the small cap stocks have been doing. If you look at Shopper Stop, clearly the stock is seeing a good breakout today. 7%, the stock has not been doing well. It's one of the top losers on the small cap index. Shopper Stop down by about 7% itself. For you, Nilesh, how does Shopper Stop look like from a near-term perspective?
Well, the trend is clearly on the downside, and if you see in last almost 2 years now, the counter has constantly witnessed selling pressure on every pullback. So overall, the structure still appears on a weaker side, and we can expect the levels of 310 to 290 on the lower side. So 310, 290 on the lower side can be seen. The major resistance as of now is placed at somewhere around 370. So kind of a sell on rise structure. and not looking that promising. So first of all, it's an avoid taking any sort of a contrabet for the in this particular counter at present level.
Okay, all right. That's the view for this particular counter. But yes, let's talk more about stocks. Jindal saw this particular counter has seen a sharp decline today, given that the company has said that its API license, which is related to seamless pipes, has been suspended post the observations which was made during an audit by the American Petroleum Institute. So yes, the stock is down by about 5% as a negative reaction to its news announcement. Now, the company has said that the financial impact of this news flow is immaterial. So going ahead, we'll be watching how the stock behaves. But for the time being, Nilesh, how does the near-term trend look like for Jindal SAW?
Well, near-term trend is still looking weak. The only positive I can see on the chart is that it has a very strong support of its 50-day moving average that is placed at 174. So 174 should be the stop loss if somebody is already holding the long position, and not advisable to buy this particular counter at current level. Although we may see some bit of a pullback since we have seen a sharp decline in last 2-3 sessions. So some pullback towards 180, 185 that cannot be ruled out. But not a buy at current market price. I would rather suggest to wait for a breakout. If it breaks 195 to 200 zone on the upside, then probably we can expect a short-term bottom, and then target on the upside could be 220 to 240 will be open up. But as of now, it's an avoid.
All right, it's an avoid for the time being at the current juncture. But yes, sir, the last rates coming on your screen, we've clearly slipped below that 25,450 mark as well, seeing a decline of about 450 points, so a very sharp breakdown, which we are seeing on the Nifty 50 index. Sensex also declining by about nearly 1,400 points, 1.5% cut coming in for the Sensex as well. And with that, Nifty has snapped its 3-day gains for this week itself. If you look at the Bank Nifty index, also seeing a decline of about 900 points. Nifty Midcap index also seeing a cut of about 1,000 points as well. So yes, all in all, it's been a very negative day for the markets. It's been a tepid Thursday, so to say. So yes, we'll, of course, it's on the back of the geopolitical tensions, which is what has made the markets quite nervous in today's trading session. If you look at the India VIX, clearly showcasing that the markets have been panicking at the current moment. India VIX up by about 11% at the current juncture. And all of the sectoral indices, they have ended in the red. You name it, if you look at Nifty Realty Index, it's down by about 3%. Nifty Media Index down by about 2% itself. PSU banks, which, we have seen that Nifty PSU Bank had been doing quite well in the past couple of sessions, but even that has not held the gains. Today, it's down by about 1% each as well. So yes, you name it, FMCG, IT, auto, all of them have been sulking and have been succumbing to the selling pressure. But yes, let's take a quick check of how the top losers and gainers look like on the Nifty 50 and what did well in this market. So yes, if you look at the advances, only just a couple of advances on the Nifty 50 index, just 3 advances versus 48 declines on the Nifty 50. So among the 3 advances include your ONGC, Hindalco, HDFC Life. All of these counters have done well, but what did not do well and what succumbed to the selling pressure, you can see Interglobe Aviation on the back of Brent crude prices surging by about 4% to $71 per barrel, which is not good for the aviation counters, given that rising crude prices could wane on the margins of these companies. And that's why we are seeing a negative reaction which is getting played out. Trent also not doing well with about a 3% cut coming in for there as well. Ultratech Cement with about 3% decline. M&M, Bharat Electronics, Bajaj Auto, Adani Ports, some of the other losers on the Nifty 50 at the current moment. But yes, coming to you, Nilesh, for Godfrey Phillips, that stock has once again done well, quite well today. Yesterday also that the stock had seen about 19% gains. And today also the stock has seen about 2.5% gains. Going ahead, do you believe the stock is will be able to sustain the gains from here on?
Well, Lavisha, if you pull up last 2 months chart, you can clearly see a copybook style inverse head and shoulder pattern breakout that we have seen yesterday in this particular stock from the neckline resistance, which was placed at 2200. And that neckline resistance has been taken off decisively. If you talk about this particular pattern target that is coming somewhere around 2650 to 2700, which has almost got achieved. But overall, the broader structure is indicating that there could be possibility of some bit of a consolidation before we see another leg on the upside towards 2800. So overall, the position target comes somewhere around 2800, but before that, we may see some consolidation in the range of 2350 to 2600. So if you get any dip towards 2400, that can be used as a buying opportunity, keeping a stop loss below 2300, and a gradual up move towards 2800 that cannot be ruled out.
Okay, all right. That's the view for Godfrey Phillips. But just one last question before I let you go, Nilesh. Why don't you list out some of your top picks amidst this market sell-off?
Well, Lavisha, as mentioned during the commentary that overall HP, BP, IOC, all the OMC stocks are looking weak. We have a positive outlook on the Brent crude, where we expect Brent crude to move towards 75 to $78 going forward. So will have an adverse effect on the OMC stocks. HP, BP, IOC, all these three stocks are looking weak, but specifically HPCL, this particular counter is looking weak, and we can expect a follow-up on the lower side to continue towards 420 to 410. So these are the targets on the lower side, and stop loss should be placed at 445. And apart from that, within airline space, Indigo will also likely to face some bit of selling pressure. Paint stock, Asian Paint, Berger Paint. So these are also an avoid from a short-term trading perspective. Now, talking about a positive setup, ONGC has given a very good close today. It opened with a gap up opening and sustained throughout the day in spite of a selling pressure that we have seen across the board. So this particular counter was bucking the trend, and we have seen a positive close as well with a good breakout. So overall setup looks positive for 280, 285 on the upside, and stop loss can be placed below 269. The structure for NGC looks positive.
Okay, all right. Some crude sensitive names, that's what you have charted out today. But with that, we have to let you go, Nilesh. Thank you so much for joining us.
Thank you so much, Lavisha.
All right, clearly a day of sell-off for the markets, and it has turned out to be quite a terrible Thursday for the markets, given that over 3 lakh crore rupees of investor wealth has been eroded. And